Thanks for staying with us. Now, investors in Africa continue to bear the brunt of sticky inflation, and we've also seen that side by side with depreciation of local currencies and foreign exchange pressures, not to say the least. Now, the net effect of the continued slowdown in the global economy comes with a heavier impact on the private capital equity or activities in Africa. Folake Elias Adeboale, partner with Udo Doma and Belo-Osagie, joins us virtually to unpack this and provide more insights. Good afternoon, Folake. It's good to have you on the program. We've seen.
Thank you very much.
Okay, we've seen the first
I enjoy
half.
your show. I'm delighted to be here.
Great. We've seen the first half of 2023 has been described as a very lackluster. From your perspective as a private equity, venture capital and mergers acquisition business advisor on Nigerian and cross-border deals, which key dynamics, which key drivers have had the greatest impact in shaping and driving current investment and business activity in Nigeria?
Thanks again for having me, Will. I'm delighted to be here. I very much enjoy this show. Let me begin by saying that Nigeria and other African jurisdictions will always be fertile ground for business and investment activity. That's my firm belief. No matter what the short to medium term challenges that we are facing or the steps that we're going to have to navigate and take to facilitate and optimize the business environment to sustain our capacity to attract investment and funds, capital funds from debt. I think encouraged in saying that because industry analysts for private capital, for instance, there's an AFCA report that very encouragingly reports that many limited partners, the global financial investors, the direct finance institutions, continue to consider Nigeria attractive within a 5-year horizon for investment, and this is even more so than emerging markets. In addition, they are still committed to committing private capital over the next 2 years to the continent, notwithstanding all these challenges that we've discussed. So what is sustaining this investor interest, you might ask? And I think it's a shared commercial opportunity that Nigeria and other African jurisdictions present. You have the abundant resources, you have the demographic advantages of the huge population, a young and fast-growing population workforce, over 55% of which are of working age. You have fast-growing, underserved consumer markets. You have the infrastructure deficit, which I see as presenting a huge opportunity. We're talking energy, we're talking technology, communications, food, and energy access. And then there's, of course, our unbeatable entrepreneurial spirit. In terms of why, notwithstanding all these fantastic factors, we've seen a sharp decline in FDI. The National Bureau of Statistics reported a drop between Q4 2022 from $84 million to $48 million in Q1 of 2023, which is sharp. Last year was actually quite encouraging, but things seem to have taken a bit of a nosedive. And that I think is the result of various factors, not all of which are homegrown or domestic. It's a combination of domestic and global factors. I mean, globally, the macroeconomic headwinds have also not been amazing. A lot of our supporters, our investors are also caught up with sort of their attention is a little bit diverted by addressing their own in-country macroeconomic issues.
Folake, yes. I want to know, you've mentioned the headwinds, macroeconomic headwinds are one of the major issues we've had, but where are the investment? Where are the opportunities? Which sectors are attracting the strongest investment interest in volume and deal size? Because we're seeing that we recorded about a 44% decrease in deals and volumes and 54% decrease when compared to the half year 2022. The first half of 2022 has seen a decline in this areas.
Mm-hmm. So I think that going with the macroeconomic headwinds, the COVID resilient sectors, as I'd like to call them, like the tech, tech-enabled businesses. You've got healthcare and life sciences. Financials are always strongest. You have got agriculture also, and manufacturing and the consumer goods sectors that continue to attract investor interest. They have continued to do so. Deal volumes, mostly financial sectors, the financial services sector leading the fray. In terms of deal value, we're seeing smaller deals being done as investors. The nature of the deals, for instance, in Nigeria, have interestingly been driven by the venture capital sector. That and the macroeconomics and investor perceptions of a heightened risk environment as a result of those macroeconomic headwinds have meant that both investment deals and lending have been sort of smaller sized. Last year, they were very, very high. They were almost 626, I think, according to AFCA, reported deals done in the continent. This year, that has dipped. There has been, I think that discrepancy is due to the same stories that are being told, not just in Nigeria, but across the continent, about depressed GDP rates, high inflation that is driving down purchasing power, high interest that is stifling the ability of consumers and businesses to borrow. Those sorts of issues, and especially you mentioned in your question, the FX volatility and unstable currencies, I think, have sort of exacerbated those challenges. Because what do the FX volatility issues mean? It means that businesses that are import dependent, perhaps they get goods and services that are essential for their operations. There's less certainty about their ability to predict, their ability to pay for those goods and services. Investors are worried about their ability to repatriate capital, being dividends or on disinvestment.
Okay.
Lenders are worried about the ability of borrowers in Nigeria and elsewhere in the continent to repay loans.
Okay, Falake, I know you have a lot to unpack there, but just very, very quickly, could you just tell us the trends to watch, the investment outlook very quickly, because we're running out of time?
I think the investment outlook is fairly positive. We have a new CBN governor finally confirmed by the Senate yesterday with his 5 deputies. I think maintaining consistency and effectiveness in policy implementation will be crucial, in addition to addressing the FX shortages, stabilizing the naira, taming inflation, taming interest, and especially engaging investors. Those will be the keys, I think, to ensuring that, if not in the immediate short term, in the medium to long term, investor confidence remains and increases.
Thank you so much, Falake Elias Adebo-Alicious, partner Udo Udoma and Belo-Osagie, joining us on Business Incorporated and sharing your insights. Thank you so much for joining us.
Thank you, Will. Thank you.